Grab is being ordered to pay 10 million pesos in fines due to overcharging. The Department of Transportation said the decision stems from Grab's move to charge 2 pesos per minute for waiting time. On top of the fine, Grab is also being ordered to reimburse its overcharged passengers. Grab has declined to comment, and the company says their legal team needs to study the decision first. The local semiconductor industry, which is a pillar in the country's export sector, is not concerned about the intensifying U.S.-China trade war. The Bangko Sentral ng Pilipinas says the Philippines may feel little effect for now. Bim Santos has this story.
The country's electronics sector brushed off concerns that their industry may be affected by the unfolding trade war between the U.S. and China. The Semiconductor and Electronics Industries in the Philippines, or SEIPI, said they are confident global appetite for electronic goods will remain strong. The United States recently slapped 25% tariff on about $34 billion worth of Chinese imports, a move that China dubbed as the biggest trade war in economic history, and sparking fears of a global tit-for-tat that some say will send ripples across global markets.
I don't expect a significant impact on the electronics industry. The fact of the matter is, well, both China and the U.S. are big export destinations for our industry. But as I was saying, the fact of the matter is, with the global technology trends, it's going to be there. The world is going to need electronics products.
La Chica added they are maintaining their 6% year-on-year growth forecast in export revenues this year. Year to date, La Chica said they are now at 3% export growth.
At this point, really, we're not perturbed. We're not overreacting to this trade war.
Electronics exports usually account for half of the country's total merchandise exports. The United States is the country's top market for electronics products, followed closely by China. Economic managers have long downplayed possible effects from the trade war. The Bangko Sentral ng Pilipinas likewise said they see negligible ripple effects at this point.
Yung ating ini-export at saka ini-import from the US and from China are very negligible, maliit lang. So that's the first round effects. Walang masyadong impact sa atin.
But should the trade tensions be protracted enough to pull down global growth, the Philippines may then feel the pinch.
Pero pagka umabot ka na doon sa second or the third round, when economic performance of the countries involved, like China, Japan, or even the US is considered, then the impact could be more significant.
Gunigundo, however, said that the country should still prepare by continuing to diversify its import-export partners and further improving industry competitiveness.